Can this company sustain this growth? Can it take over this part of the industry?
You know, it was funny. I remember people saying, well, Tesla's doing fine, but once the other people get involved, they're going to fall behind. Well, you know, I've seen the electric cars from Europe, and they fall short. They don't have the range of the Tesla. They don't. I mean, because Tesla leads the field.
How will this inclusion, Dan, reshape or change the S&P 500 index?
And of course, that volatility that sometimes we see in Tesla, I think maybe you could see a bit of that more in the S&P. But this is something that, it's a feather in the cap for Musk. It's really about profitability, because that's what it says. It shows the ratings in the rearview mirror, that shot of credibility. I think it just shows how far we've come the last few years.
Tesla has had a phenomenal year in 2020, with the stock soaring almost 800% just this year alone. And with the amazing news of the S&P 500 inclusion, which is a historic move as it will be the largest inclusion in the index history. Tesla will be the 6th largest company in the S&P by market cap, right ahead of Warren Buffett's Berkshire Hathaway with a market cap of over $650 billion. In the previous video, I talked about the impact of Tesla stock on the S&P 500. If you guys haven't watched this video, click on the annotation on top of the screen, so that way you guys can get more perspective on this move. But in this video, I will center a little more on the fundamentals of the company and what we can expect to have a little more perspective when it comes to Tesla stock, because at the end of the day, it is the backbone of every business, and it is very important to keep in mind for us investors that are long-term in Tesla, as well as those that are a little bit on the short term. We will discuss cash flow, margins, profitability, and beyond. And if this is something that interests you, don't forget to subscribe to Electric Invest, and do make sure to hit the notification button so you don't miss the next video on Tesla. Without further ado, let's begin. So first, I want to talk a little bit about the history of the run-ups of Tesla in 2020. I believe that it is very important for us to keep in mind on the catalyst that has made this stock be such a popular stock in this year. Aside from many analysts already starting to understand the picture, such as Jim Cramer, that's already starting to understand that Tesla is more than a car company.
That means the whole index needs to be rebalanced to make room for a stock that just won't quit. We keep coming back to Tesla because it's captivated a whole generation of investors who don't mind paying up for a $650 billion technology company that happens to make cars. I think the evolution of Tesla, the stock, not the company, has changed the character of the entire stock market.
And just recently, Jay Leno, speaking about the American innovation and his recent understanding about the greatness of this company.
You know, it was funny. I remember people saying, well, Tesla's doing fine, but once the other people get involved, they're going to fall behind. Well, you know, I've seen the electric cars from Europe, and they fall short. They don't have the range of the Tesla. The fact that Elon can send a rocket into space and land it back on Earth for what, a tenth of the price of what the U.S. government. Well, that's what private industry is supposed to do. Cheaper, faster, more efficient.
All of these things are great for us investors when we see people of this caliber in the mainstream media being able to finally talk about the advantages that Tesla has, which tends to solidify the understanding of the significance of the inclusion to the S&P 500. So it seems like all the ingredients are coming together for Tesla, and the general public is taken into account. So one of the biggest runs that Tesla had this year in 2020, right after the pandemic, which we already know that Tesla ended up having to shut down the Fremont factory in California, which halted the numbers quite a bit. But right after being able to resolve this issue, we saw that back in July 22nd, when one of the biggest runs for Tesla of over 71% up until that point, and it was thanks to the announcement of its 4th consecutive profitable quarter in a row. This was the first time that Tesla was profitable for 4 quarters in a row, and this was extremely important because it finally met the criteria for the S&P 500 index fund to finally consider Tesla for its inclusion. Understandably, this got a lot of investors excited, as it was one of the biggest short seller points to throw Tesla under the rug regarding the fact that they kept saying that Tesla was not profitable. Right around this time, the stock was trading at around close to $1,000 pre-split, which would be around $200 after split adjusted today. Moving along to the second major run-up for Tesla this year in 2020, and that was right around August when Tesla announced its 5-to-1 stock split, and the stock started soaring literally overnight to all-time record highs of $498. Although Tesla was experiencing some setbacks in China during this specific time, the news of the 5-to-1 stock split helped the stock move forward. However, Tesla kept moving back and forth for a period of about close to 3 months from 400 to 420, having a tremendously huge resistance distance that would not go over $450. During this time, there were no other major catalysts, and a lot of people were looking into other stocks such as NIO because they started soaring right around this time. However, just last month, in November 18th, we had the long-awaited announcement that Tesla would finally be added to the S&P 500. On November 16th, Tesla was trading at around $408 per share, and the minute that it was announced that the S&P 500 would be including Tesla, the stock just skyrocketed after hours to over $466 a share. And this brings us into today, where as of Friday, December the 18th, Tesla closed at an all-time record high of $695 per share. This would be $3,475 per share before the split, which is extremely close to Cathie Wood's prediction of $4,000 a share.
The analysts following this stock don't know how to analyze it because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together. We have set out our research teams. We have broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. It is our highest conviction idea for a reason.
And despite the fact that she was the center of ridicule, I don't think anybody would be laughing at her now, especially those short sellers that kept losing over $35 billion shorting Tesla. Friday's trading day was one of the most volatile days in Tesla's history, and to put it into perspective, Tesla has a normal trading volume, usually around 50 to 60 million, but just on Friday alone, we had 4 times this number with trading volumes that hit over 200 million trades just in the last few hours of the trading day on Friday. So if I'm not mistaken, this was a record, and I'm not really sure, maybe you guys can let me know in the comment section below if there was a larger trading volume for any other stock. I'm not really sure if I know any other, but this was definitely for the history book. So this begs the question, and that is, where is Tesla headed after this historic move, and especially where we could see Tesla into next week? Now, we do still want to emphasize that Tesla will continue to be volatile on Monday and leading into the rest of the week. And I do want to point out that this video is not financial advice. This video is for illustration purposes and to provide perspective when it comes to Tesla, and the information in this video is my opinion regarding my personal understanding. So with that being said, moving along, Tesla's weight on the S&P 500 of just about 1.6%, which is quite significant for many hedge funds and indices that track and mimic the S&P. Tesla has gone from an annualized free cash flow and net income of a negative $4 billion just a year ago to a trailing 12 months free cash flow of positive $2 billion and a net income of over $556 million. Taking a look into Tesla's revenue history back in 2017, we can see that after the introduction of the Model 3, which was Tesla's most profitable product to date, they reached revenues of over $11.759 billion, which was a 67.98% increase from 2016. This was very significant, and it was the first piece of the puzzle to Tesla's profitability. And right after we saw over 82.51% right over to the next year in 2017 with revenues of $21.46 billion. So looking into this year, Tesla is estimated to reach $30.9 billion in revenue, and it is projected to reach $45.5 billion by 2021. This is tremendously significant because this would mean that Tesla will increase over 47% year over year into 2021, and it is up to par with Elon Musk's projected growth of over 50% annually. So taking a look at the graphs from microtrends.net, we can see that Tesla's revenue has been steadily increasing, and it only ended up slowing down around the 2020 pandemic issue because, as we already know, despite the fact of the slowdown, Tesla was literally the only auto manufacturer that was being profitable in 2020, which is always very helpful to visualize. So taking a look at the automotive margins, which is very important to consider, Tesla has been increasing constantly and improving the automotive margins all the way back in the third quarter of 2019 with automotive margins of 22.8%, and the second quarter of 2020 with 25.4%, and the third quarter with a whopping 27.7%. And this metric is a key measure of an automaker's sustainable profitability, and it shows that Tesla has made steady progress in its production cost per car. One of the great ways that they have achieved that is by reducing many parts with the largest casting machine in the world, which in case you guys are not aware of, is this machine that Tesla manufactured. No other car manufacturer has ever used this machine. This was a machine that Tesla literally decided to make to be able to cast the entire back of the car, going from hundreds of parts put together all the way to a single cast, reducing costs tremendously while returning strength of the structure. So this is just one of the ways that Tesla has been able to increase the vehicle margins for more profitability. Another way of that Tesla will be increasing margins will be on making the new 4680 battery be part of the structure of the car. And we saw that in Battery Day, where Elon started talking about how this would save money. Just like engineers used to have a fuel tank inside of the wing of the airplanes, but they decided to get rid of that, saving weight and saving costs, and just making the tank be part of the structure of the wings.
We'll call it the structural battery, where the battery for the first time will have dual use. The use as an energy device and as structure. In the early days of aircraft, they would carry the fuel tanks as cargo. So the fuel tanks actually were quite difficult to carry. Then somebody said, hey, what if we just make the fuel tank in wing shape? Your wing is just a fuel tank in wing shape. This is absolutely the way to do it. And then the fuel tank serves as dual structure. And it's no longer cargo. It's fundamental to the structure of the aircraft. This was a major breakthrough. We're doing the same for cars.
So this is the same thing that Tesla is going to be doing when it comes to the battery pack. Rather than having a battery pack, they're going to make the battery a part of the chassis and the frame of the vehicle, thus saving even further, aside from the single casting option that I already mentioned. So there's so many different ways that Tesla is saving money and increasing margins, and it wouldn't surprise me if Tesla reaches over 30% margins for the fourth quarter, which would be an amazing first timer for any automotive company ever. So these are one of the things that we investors have to keep in the lookout for understanding Tesla and the business and what we can look ahead into 2021. And this is why Tesla has been in the forefront for this new emerging EV market, from revolutionizing transportation with cutting-edge battery technology that enables faster, sleeker, and more affordable electric vehicles, to a colossal achievement in solar and energy storage, as well as the one-of-a-kind manufacturing process that I just described earlier. Tesla's true innovation is not just on the cars and technology, but also on the manufacturing and engineering itself. Tesla is by no doubt the most successful electric car company with one of the largest market caps in the world. Tesla's inclusion to the S&P 500 has been the very first step of many from a widespread recognition by traditional institutions. And despite these very same institutions having a lack of understanding on Tesla's potential as well as the entire EV sector as a whole, index funds such as the S&P 500 are finally going to be part of one of the major successful stories of the 21st century. So now I want to know about your opinions regarding Tesla. Do you believe that Tesla will continue to be the #1 innovator when it comes to the EV market? Are you a long-term investor into Tesla? Or do you believe the stock is too high and you're waiting for a pullback? I would love to read your opinions in the comment section below. And I just want to point out real quick before we end the video that as long-term investors, we pay attention to the stock's fundamentals as well as the company's execution. At the end of the day, I personally don't look at the price of Tesla. I always try to invest on regular intervals as much as I can. Now, it is very nice and wise to wait into dips to be able to do so. But at the end of the day, will Tesla be higher next year than it is today? Absolutely yes, and that is something that I believe so. And again, this is not financial advice, this is just my opinion. If you guys found this video helpful and informative, don't forget to subscribe to Electric Invest, where we discuss EV companies, and Tesla is heavily covered. Don't forget to hit the notification button so you don't miss the next video on Tesla. Perspective is my goal, and being able to present information in a way that can help you formulate a little bit of a better understanding of what you're investing on is the key of this channel. If you don't want to miss the next video on Tesla, and I'll see you guys on the next video.